This conference will now be recorded.
Hey guys, welcome to the Equity Trade Room. It is March 3rd. March 3rd. Let's go to our trade of the day. I attempted to record this live, which is my main purpose of this trade of the day segments, but the market moved too fast on this one for me. And this was using my smart scalping strategy. That's the triple S, smart scalping strategy. And this is how it went down. So we have here, if we open this up, these green lines are major pivot lines from other times of the week or days. And then we have this trend line here, and we're in a 1 minute. I wait for price to come up and touch the trend line. Now with this strategy, I'm not basing this off of higher time frame trend lines, order blocks, etc. Everything is based off of the 1 minute. And when you're basing something off of the 1 minute, it's not really it's not realistic to hold these type of setups for a 1 to 5, 1 to 10, etc., because you're not basing it off of a higher time frame analysis or a higher time frame trend line, order block, fair value gap. For this example here, this is a 1 minute based off of a 1 minute trend line. I also look for confluence. I look for a fair value gap. I look for Fibonacci, main pivots from the Fibonacci, the 61, 69, to coincide with my trend line. So in this setup here, I had the order block and then impulse move down that broke structure. But more importantly, let's just focus on, we try to make sure that we have some type of confluence. So if we're looking for a short and we draw our fib from the most recent high to the most recent low, there we go. And as you can see, once we open this up, sorry about that. Once we open this up, clean it up, there we go. Okay, so we draw the fib from the high to the low, right here. We have a fib right here, this dotted line, and this dotted line here. That's a 70 and a 69. So that little zone there, this zone from this white dotted line to this white dotted line is an area point of interest right here. Okay. Also, there's a small slither left of fair value in this gap here. Here's the order block, here's a shoot down, the impulse move down, and price left originally, it left this fair value gap. Price came up and filled up half of it, but still left like 40 to 50% left. Right there. So this would be like an updated fair value gap that was remaining. So we move back to the box. So we have beneath my trend line, we have a fair value gap still remaining. And right above my trend line, we have 2 Fibonacci levels. So for me, that's the confluence. I'm not looking for 1 to 5. I'm looking for, I want to have normally either 1 or 2 contracts, 1 or 2 targets. I always want at least 1 to 2. So if I just get rid of this stuff here, now that you see where I'm at, let's get rid of all of this. Okay, now it's clean. So when price comes up here into my trend line, I'm looking at the very least 1 to 2 on the lower time frame. Once my price hits 1 to 2, I have potentially a couple of options, depending on my contract size, depending on where I'm at during the day, etc. I can target the most recent low, which is right here. So we put a little green dot there. This is after you secured some profit. When you're on the smaller time frame and you're basing your entries off of the same smaller time frame, you have to be realistic. You cannot hold for these 1 to 10s, etc. Price moves too fast. Before you know it, you're up 1 to 2, and before you know it, you're at break even. So you have to get profits. Now, if we just measure this out, what would have been the maximum amount that I could have went for with smart scalping strategy? Well, here is the entry area. This would have been wrong one. Let me do this again. All right, here would be the entry area. We'll put a 200 tick stop. And right less than 1 to 4, basically. This would have been the target right around here. So our maximum target would have been 1 to 1.9. So this was a big one if you would have held for it. Okay, this is 1 to 10, this is 1 to 5. This is 1 to 1, this is 1 to 1.5. Okay, and then here is 1 to 2. The maximum amount would have been the most recent low. And that's if you have like multiple contracts and you can like put a target here, put a target here, put a target here, put a target here. You want to make money on your way down because price moves too fast if you're starting from the 1 minute. This is different than analyzing from a 15-minute, even a 5-minute. We are analyzing from a 1 minute. So our mentality has to be different. Go for 1 to 2. And if you have like a big account or you're trading the macros, have like 3, 4 targets and spread it out, right? Now, if we scroll to the left, let's see if we hit the one that's 1 to 8. We did if we would have never moved our stop. All of this is in hindsight, and you have to have a lot of patience. Me personally, I don't have enough patience for that. So if my entry was around here, my stop was 200 bucks. I stretch this out. I walk away from the computer, right? I get triggered in around here, and I have like a target at 1 to 1.5 or 1 to 2. And I have another target, let's say 1 to 5, and then another target 1 to 5 down here, and then another target down here, 1 to 10, right? Yes, it hit it. Okay, but once again, you would have to walk away from your computer. Nobody is going to sit through all of this. I know I'm not. You have to be the Zen master to sit through all of this. And you would have got stopped out in less than a couple of ticks here. A lot of heat. After being up almost 1 to 4, you already hit 1 to 5 and at 12:45 East Coast time. To hold it and go from 1 to 5 to almost getting stopped out, then hitting your target, that's not feasible. What's feasible for the smart scalping strategy is go risk 1 to make 2. And if you have multiple contracts or you're trading on the macros, then you can hold it. I mean, take your profits when you hit the target, the 1 to 2 or the 1 to 1.5, and then hold 1, move your stop to break even, hold 1 to go to 1 to 5 or 1 to 10. But move your stop to break even and make sure you already have taken profit. That's the key with this strategy. You have to take your profit. You want to do more than 1 to 1, of course, but you also want to take your profit. So we had a couple of key additions when it comes to confluence. We had a fair value gap here. We had the major pivot, Fibonacci pivots above and below. We have all that stuff ready, confirmed. Then now price missed me here, right? It missed me here. So, but it came back up and gave me another chance here. So when it goes up and hits it, I go to the 10-second. And here in the 10-second, as you can see, price blew. It blew up. It blew up past my trend line. So what do? This is why I enter on the 10-second. I wait for as long as it doesn't blow up too far past it. If the next candle immediately reverses and comes back down and closes beneath my trend line, then I'll give it a shot to go short. Because if it's going to work, I need it to work like that. I don't need it to hang around here going back and forth for 5-10 minutes. This strategy, the whole point is you want a reaction from the trend line, a sharp reaction, a reversal. That's what you want, a sharp reversal. You don't want it hanging out here in a little small range. No, you want a reversal. Now, I made a technical mistake. With this strategy, you have to enter with this is a sell, with a sell limit. That's how you enter. Okay.
Order submitted.
Sell limit. You can't enter on like a sell stop. It has to be a sell limit. That way, all you have to do is just drop it. Once you see price on this bearish candle here, this 10-second candle, this is your entry. If this thing closes bearish and beneath the trend line, you go for it. But it's 10 seconds, so it's moving kind of fast. When you see your candle going down, and it's like 7, and I have a timer right here. When you see 7, 8, 9, and prices down here, it's a 99% chance price is going to close bearish and beneath this trend line if it's only 2 or 3 seconds left. I don't see happening in 2-3 seconds. Price shoots up and closes bullish or above the trend line. That's not something that happens on a regular basis. 9 times out of 10, the price is already around here on a 10-second bar. Price is already around here, around 7 seconds. 7 seconds have expired, 3 seconds left. Price will probably close bearish around here, all right? Normally. So when you see that, because you have this limit, all you do is drop it like that. And it'll trigger you right in, and it'll trigger you right around this area. You'll lose a tick or two, but you're still getting in earlier than when the price closes right here. You'll probably get entered here, but you tried to, or you placed your order around here. That's not bad because your original entry was here anyway. Actually, one tick beneath the close. So your entry would have been, if you look to the right there, 4392.25 would have been your entry if you placed an order. You don't have time to place an order, you gotta drop it. But you don't want to just do a market order. So once again, when you see price coming down on a 10-second, you're at 7 seconds, 8 seconds, and it's down here, price is pretty much going to close around here. So just drop it in early. Don't wait for it to close. That way you're guaranteed a decent fill and you won't miss this move down. Well, I didn't have the right order. I had a sell.
Order canceled.
I had the sell stop. So I had this. Well, the price is above it. So let me just go back to 1 minute and show you what price is at now. Here's price now. All right. So let me make sure I'm on demo as I show this. Yeah. So if you put a sell stop right here.
Order submitted.
Okay. Sell stop, you have to be beneath the price to place it. If you put it up here, it's not going to work. See that? So price, you have to literally put, and some of you guys might already notice, might be some newbies in here. Sell stop, you have to put it beneath it, like here.
Order filled.
You go, right? That's a sell stop. You don't want
order filled.
time for that. Price is moving too fast. It's a 10-second chart. It's not feasible. So instead, you do a sell limit right here, right? Sell
Order
limit.
submitted.
And right now it's at 25. Let's wait till we get to make it look realistic on a 10-second candle. All right, let's say we want to go short right now. Okay, here's 10 seconds. 9, 8, candle's bearish. I want to go short. Drop it in now.
Order filled.
Why? Because it's already bearish and it's not going to turn bullish with just 1 or 2 seconds left. And you can see my fill was pretty doggone good because that's where I would want to get filled at if I had a sell stop. 1 tick beneath the close. This is 1 tick beneath the close. 1 tick beneath this close right here. Because I dropped it in a second or two early. And all you do is just drop it in. Very easy. Just make your chart bigger so you can see it and drop it in.
Order filled.
All right. So let's go back to the live chart on the 1 minute. So this is where I was at. Giving you guys some context and just to see what I was seeing. Price goes up here. I go to the 10 second. Right here. Price shot up. And then I should have had my sell limit ready right here. I didn't. I had the wrong order. I had a sell stop, so I wasn't able to drop it. And I was just moving too fast. I made the error. So when I tried to drop it, I got that error message. Why? Because it was a sell stop, wasn't a sell limit. So then I had to switch it up, put a sell limit, and I got in here. So I got in late. When you get in late, you don't still have the same targets. Your targets were based off of up here. So if I would have got in on time, one tick beneath here, and made a 200 tick stop, all right, 200 tick stop. Oh, wait a minute. We want to do 1 to 2. So one tick beneath here and 200 tick stop. Okay, here we go. So if I'd have got in where I was supposed to get in with the limit order, price would have gotten me out, hit my target right here. This would have been literally a 1, 2, 3, 4, 5, 6, 7, 8, 80 seconds. Every bar is 10 seconds. This would have been an 80-second move to get 400 bucks on one contract. Okay, one contract. Risk 200 to make 400. That was my intention. I waited a long time for this setup. If you just look at my trend line, I don't want to make no mistakes here and get penalized. I've done that in the past. Look at my trend line. Here it is right here. One touch, two touch, and then third touch right here. Okay. This was at 9 o'clock New York time when I drew this. 9 o'clock. This got hit at 12:37. It's a 3.5 hour wait. It's a 3.5 hour wait, guys. Go back to the 10-second. So after waiting 3.5 hours, I got my opportunity and I made a technical error. I had the wrong order. So I was not able just to drop it because price was going down 7 seconds, 8 seconds, whatever. It's around here. I know price is not going to reverse and go positive and turn this from a bearish candle to a bullish candle in 2 seconds. It's going to close bearish. So just jump in early here and you'll get filled around here, which is absolutely perfect. And then you just hold it. And then a minute later, you hit your target. Now, if you're trading, if you have a bigger account or a bigger prop firm account, like 300,000, you can have a target here and another target down here somewhere, 1 to 5, 1 to 10. But you always got to get your money because this is based off of a 1 minute time frame, not 5 minute, not 15 minute. All right. It's very important to remember that, but you can make good money. This was a $400 trade, literally risking 200 to make 400 in 80 seconds based off of my analysis, what I was looking for. That's the setup. So I go back to a live chart. I got in late and I got out right around where I would have. I was supposed to get out here. I got out here. I was trying to hold it. You know, to see if I can get a bigger push. But remember, price is moving fast on these 10-second candles. So you don't have time to play around. Just as fast as it reversed from here to here, it could have went up to here and then back and stopped me out right here. So I think I got 1 for 1, whatever. I didn't get a lot here, but that's because of my error. This is the smart scalping strategy. triple S. All right, triple S. This is what this is. And it worked to perfection. You just have to execute. The trader has to execute. All right, guys. So that's the video. So we still finish at the end of the day positive, right? Without human error. I'm going to try to get this thing programmed so that I don't have to do anything when it comes to the execution. Like I want to get that. I want to see if I can get this programmed. I want to eliminate as much human error as possible. So I'm working on that now for NinjaTrader. All right, guys. Peace.